All right, good afternoon, everybody. Good evening, good morning, wherever you are. You have reached ReadySetCrypto's live stream here today. So today is Wednesday, the 6th of July. Welcome aboard, everybody. Let us know where you're coming in from today, if you don't mind. And also, don't forget to hit the thumbs up button if you would not mind, because it lets everybody else know that we are live and streaming, and it defeats the algorithm. Welcome aboard, everybody. Glad to see you out there. We do have Amsterdam in the house. That is our first here.
All right.
Northampton, England. All right, Harpy. Did I say that right? Northampton. I'm coming to you guys from beautiful downtown Greenville, South Carolina. We'll get started here in just a minute once we get everybody in, once we get all the puppies in the box. And what will happen is Mav will come along and drop a little knowledge bomb on y'all. And then as you guys log in, let me know what coins or pairs that you want to look at, and I'll go into my TA section. So we'll switch over to the charts for a couple of minutes. We'll be done probably in the bottom of the hour. We're usually here for about a half an hour once a week. All right, we got Fairfield, California. Rajith checking in. Welcome aboard, everybody. Mav, how's it going out there?
Oh, just hanging in there. I think it's a very quiet day, isn't it? I think just across the board. Look at the volume right now.
We had really low volume in the equities market today too, even though we had the FOMC minutes, because we care about what the minutes of the meeting were from 2 weeks ago. I think it's incredibly redundant, ridiculous, but that's just the way it is. People are looking for clues.
Yeah, I think there's usually a post-holiday little lull here, but I think that's also in relation to just overall market sentiment. And I think I can probably start to dig into a little bit of what I'm looking at today. Not a whole lot. I will give that little spoiler for today, but as I was just talking about, the total cryptocurrency market cap right here, obviously having a little bit of a dip. But those in like the DeFi space, for example, will be quick to tell you to build the dip. So it is definitely a case of, hey, the market's not doing anything too interesting. Let's look around for what is. And certainly that's not CeFi right now. That's not anything, the exchanges or anything out there. So as I was talking about in yesterday's Omnia newsletter, I'll give this a little zoom in here for you guys. All right. So most important thing is if you want a real relation as to the inflation factor, well, nothing like the July 4th barbecue. And you can see, wow, those are big numbers, in terms of.
I like barbecue.
Yeah, I think we all do. But yeah, I think that's just one example of when we look at GDP and we look at the production of that, or rather, like where does GDP growth really come from? It's at least in 75% of that is around consumer spending, right? And that's really a confluence of four factors. That's food, as we're seeing here, is on the rise. That's oil, which is still pretty high. Maybe coming down a little bit, but it's no brakes at the gas pump anytime soon. Shelter, or your housing, which here, if I can ever figure out how to get rid of Zoom here, I was just looking at how it is the case that it's still a nightmare market out there. There's trepidation on the seller side that they might have missed the top there, and still is impossible for anybody trying to get into, especially their first house. So you got three factors out of the four, the last one being jobs. Those are all flashing warning signs right now. And if we did want to dig into those FOMC minutes, which I know, Doc, that's your favorite thing to do, they are talking a little bit about, they're starting to go after the jobs, and that's going to be more of what they are focusing on, which some people are taking to be a signal that they're going to be a little less hawkish with this upcoming rate hike. Now digging into yesterday's Omnia newsletter and skipping a little bit here. The three things to watch this July for crypto. One of the biggest ones is the Fed rate hike, because obviously it is, inflation, interest rates, the Fed, the trifecta of terror for 2022, if you will. And I think this will be a big one because, hey, are they going to follow up their little magic trick from last month and pull out a little surprise, basis point bump, or is it going to be lower? But no matter what, the Fed sets the prices, or the interest rate it's still not going to make the ships go faster. It's not going to make us drill oil that much faster. And as John Arnold here says, Jeffrey Curie, the Fed cannot print commodities. They can certainly print lots and lots of money, which I'm sure they're eventually going to get back to. Those money printers are only slightly cool to the touch at this point. But we're looking at July 26 and 27 for the FOMC meeting, which, Doc, when you pull up the charts, do you want to show people how to look at kind of like the percentages and how to, how do you bet on that? How do you use that as a a little tool to understand where things are going, maybe?
Well, unfortunately, the bond market is already starting to discount that move, and so the Fed is way behind, and the bond market is already looking way forward and starting to discount a potential recession.
Ah, wow. Well, you heard it here first, folks. Let's pack it in. No recession in 2022. Ignore all the warning bells. But yeah, this is the back and forth of the markets, and it's interesting to watch the dynamics. But it will definitely be the case that we're also watching some of the other big events in July. One of them being the GDP kind of early forecasts, and kind of seeing what's entailed for that. And as very similar to that is the CPI, the Consumer Price Index, which is basically just looking at, is stuff is it getting more expensive? Are people panicking a little bit more? And if so, it goes back to those factors I was just talking about. So yeah, we are definitely seeing back and forth between the bulls and the bears. But if nothing else, crypto markets are, I'd say, confused. We're hovering around that 20K mark with Bitcoin, and it seems to be fighting there. But I don't know, is that, are we just waiting for the Fed to tell us what to do next? Is that all she wrote?
I don't think so. I think we know exactly what the Fed is intending to do, because they're way behind the curve, because they kicked the can down the road all the way into the end of 2021, saying, well, inflation's transitory. Like everybody's yelling from the audience, like, no, bullshit. But, they kept saying transitory, and so they delayed the decision. And I think it may have been political, because they didn't want to, rock the boat because things were going so well. And that's exactly what you do when you're late to the party, as the Fed always is, because they're either academic or bureaucratic background for that. So they just don't have any market smarts when it comes to this. So what we're seeing is we're actually starting to see the bond market dip down in terms of yields, right? The Fed is trying to push everything higher in terms of rates to bring down inflation, and the bond markets are like, oh, that is so yesterday. That is like, so 6 months ago, and they're already dropping down. Let's go take a look here. I'm going to run this over here, and we'll take a look at some charts. Okay, this is Bitcoin versus the US dollar, and this is interesting because right now The level that's important is this one from all the way over here in 2018, because we've done this. Here's the previous highs in 2018, which is where everybody bought in, probably on this stream here. And notice how it's forming this beautiful swing test right at 20,000. So there's a lot of emotional support down at 20,000. A lot of people bought in at that level. That was the overhead resistance. And as we know, overhead resistance becomes new support. So this is the first time this has been tested for that. Unfortunately, I think that if we do bounce from here, it's probably heading back down again because of the trend for right now. But this is all part of the bottoming process. This is all part of the basing that we have to go through. So there's that. And there's also, when we go out to the daily chart, we are seeing a little pennant pattern. And pennant patterns are normally a continuation pattern, just like what we had with the bear flag here. Bear flag pattern, continuation, drops out in the same direction from whence it came, right? So this one came to the party, working to the downside. The expectation, and 99.9% of the traders that are out there are expecting it to go to the downside, right? So watch very carefully, especially if it gets above 21, it may squeeze all the way up here to 28. This could be a potential trade that we're looking at. I just want to remind you guys of what we went through a year ago, where it was quite clear. Everybody on the planet knew that this is a descending triangle, and that once we got below 28,000, we were going to dump all the way down to 20. And what happened? The exact opposite. We led into all-time highs from that point. So when everybody sees the same thing, it's likely to go in the opposite direction. And that's because, the reason for that is because if everybody is short down here, there's nobody left to sell, and they have to. The only thing that can happen is a squeeze to the upside. So one side of me says, okay, rule number one, larger time frames dominate the trend. We're probably heading lower. But the other side says, hey, watch out for anything ripping above 21, because this could move quite quickly. So to me, this is the way things might go, up here to 28 and then come back down, undercut, and then off she writes. So we'll probably need to go through at least another couple of months of basing before things are going to rip again. So just be patient and look to trade right now. Don't be looking, unless you've got a super long whole time frame for this. Don't look to be buying it as an investment right now. Look to be buying as a trade. You'll get plenty of opportunities to load up at some time in the future. Now, what I was talking about was the bond market before, and the bond market is basically saying to the Fed, has been saying to the last couple of weeks here, has been running down, and this is yields. This is 3.5%. This is now, underneath 3%. So the Fed's over here and saying, hey guys, are you playing cards? Wait for me. So it's the Fed's desperately trying to push this stack up the hill, and the bond market's saying, screw you, buddy. You're way late to the party. So watch this carefully, especially if this downtrend persists. Now, if it holds support and it bounces from there, all is good. But if we start to drop from this point, that means the bond market senses recession is imminent, So there you go. All right, let's get into some of the coins you guys talked about. Let's start off with, I think the first one that we got here was Gala. Let's see if I can find it. Okay, so here's Gala versus Tether, and survey says not a nice looking chart. Now it is basing. It is basing between 5 to 10 cents here, but you want to see the volume. So I wouldn't be trying to pick this falling knife yet. You want to see the volume as it gets above 10 cents. You want to see it spiking. But I would not look at doing anything until it's able to clear 10 to 15 cents or so. So nobody gets a medal for getting the bottom tick. It's not worth it, right? You may get lucky, but generally the probabilities state that downtrends will persist. Okay, next one is Cardano. Let's see what we got for our friend Cardano here. How's she looking? Same thing is happening here. It's basing. I would want to see this thing above 68 to 70 cents for Cardano and a breakout with big volume. Volume has been increasing lately, which is a good sign. All right, next one we got here is YOP. YOP. I don't know what that stands for. It's still in a descending pattern, and I would wait until this breaks the descending pattern. That's going to be at least 15 cents or so. I wouldn't touch this one until you get to that point. Okay, next one was AGIX. AGIX versus the US dollar. This one is also basing. I would not touch this one until it's able to get above and beyond, say, like 7 cents or so. Wait until this one gets above 7 cents. We used to have a buy point up here at about 20 cents. And you can see it's a good thing we didn't get in on that. That's why we play it this way. We wait for things to break higher. We look to go long on assets that are heading higher in price. Next one here is we finally got the ticker of this one sorted out, IOTX. And this one also, now notice what's happening here. We got a little volume spike. This is a clue. This is a clue. But I still wouldn't want to get into this one until we get above, say, like this area here, get above this pivot, start to make higher highs and higher lows. That is about 4.8 cents, 4.38 cents or so. I mean, it's really cheap, right? But I would not want to get into this one until we get to that point. Okay, then next, let's see, what else do we got here? The question is, how low Bitcoin will go? Is there support at 19,000? All right, so first of all, I'm going to go back on camera here. First of all, guys, understand, listen to me for 2 seconds here. Nobody knows what the future is. Nobody knows what the future is. There is this misconception out there that if you yell and scream in YouTube really loud, that you know where prices are going. And people do this for clicks. They do a lot of predictions for clicks and things like that. They don't know anything more than you or I know about what's going to happen tomorrow. Nobody knows. Look at some of the things that have happened over the last couple of months. Like, you know, you got to basically Terra Luna blowing up, right? You've got other exchanges blowing up. You've got things blowing up. You've got systemic risk across. Nobody expected the whole Ukraine thing to happen, right? So a lot of things, these are called exogenous risks, and nobody knows when they come in. All you got to do is follow the price. Follow the price. Don't try to predict the future. Follow the price. This is what TA does. Let's go back to the charts. Take a look at this, right? So anybody that's going to ask me where's this going to stop dropping? I don't know. I don't know. And nobody else does either. Anybody that tells you that they know where the bottom floor is for Bitcoin or any other asset is frankly full of shit. Now, with that said, there are some places that we can see where there are logistical floors of support. So one of them was 20,000. Another one down here is about 14,000 based on this spike. Probably the best tool that you can use to understand this levels of support and resistance is what's called volume profile. Okay, so if we go out here to volume profile, where is all the activity trading? So what we can see from this is that there's very little support through this area, and this is why it carved through there like it didn't even exist. This is almost like an air pocket. What you'll also see is we have a fair amount of trading, but not massive. So this could come down to about 12.5. However, once we get down to 12.5, this is where massive amounts of support. So if you're looking for like, you know, a rock bottom level to buy at, there's good odds down here at about 12,000 that this is going to be a floor. Now, could this be a floor down here at this level at 15,000? Could this be a floor at 20,000? We're finding that out right now. Now, I do believe, like what I talked about before, is everybody's looking for this to lean to the downside. we could get the opposite move, but I think the opposite move is just going to generate a bear market rally for now. And this is typically the way things go, right? So the bottom is going to be difficult for this. This is going to be, it's going to wear out everybody before this thing is over. And that's its job. This is what Bitcoin does on bottoming moves, is it wears everybody out. It makes everybody give up and say, I can't do this anymore. And this is what we went through in 2020 and 2018 and 2019. It made everybody give up. And then as soon as everybody was off, it said, okay, thank you very much. I'm out of here. And then nobody bought in because they said, well, I'm not buying that sucker rally. So you got to understand the psychology behind all of this. Okay, so way too much time on something, but hope that's an important point, is that nobody knows what's going to happen tomorrow. So set up your levels on the chart and then tell yourself what you will do depending on what the price does. Okay, around the world is looking for Cosmos. Let's go look at Cosmos here, which is Atom. So guys, don't give me the project name because then I'm going to forget what it is. Give me the ticker. Give me the ticker. Okay, so Cosmos right now is in a void mode because we had a former uptrend, which has broken that ascending trend line and is in distribution right now. So just because we're seeing this probably means that we're going to get another wave down. Probably means that we're going to get another wave down because rule number 1 says that larger time frames dominate the trend. Okay, let's see. Luxo. I haven't talked about Luxo in a long time. Okay, Luxo Tether. There we go. Okay, so we actually had this one as an aggressive buy back here, conservative buy, but it failed, did not get above 18, and has been, this is very much similar to what we just looked at with Cosmos, Atom versus US Tether. This one's in a void mode. It's showing consolidation. Range expansion goes to range contraction. I would still avoid this one until you see, remember, here's the cheat code, guys. Go out to Heiken Ashi, go out to your weekly chart on Heiken Ashi, and until you start getting an uptrend on these, just totally avoid these. Okay, back to our daily chart. Yeah, look at this thing. So we're basing out a little bit. But I mean, if you want a real entry, it's going to be above 8 or so. Okay, Polygon. Now I got to remember what the ticker is for Polygon. What is the ticker for Polygon? Anyone? Okay, until I know what the ticker is, I will go on to the next, EGLD. EGLD. Okay, so downtrend until we get above this descending trend line. Avoid on EGLD. Oh, that's right, Matic, of course. Sorry, guys, I don't remember 10,000 tickers. All right, looking for long-term holds for Gala. Okay, so you have a long time. We looked at this one a minute ago. I don't care if, I mean, it doesn't matter whether you're long-term or short-term or intermediate term or a swing trader or whatever, right? So unless you're absolutely, what you're doing is you're betting your life on an asset. I know assets that have gone to zero, that have been delisted. So it doesn't matter how much you DCA into that. If it gets delisted, if it goes away, then you're buying into a decline. So always wait until something starts to show accumulation. Don't try to be the first one out of the gate. This is a big mistake that people make during bears, because during bears, this is where assets get liquidated. This is where companies go out of business, and you just don't know which ones those are going to be. So the safest thing that you can do, regardless of your time frame, is to buy when you get a weekly uptrend. You're not going to lose that much edge off the bottom. Okay, let's see. All right, we got a bunch of people telling me, all right, so Matic, there we go. Ticker symbols, please. Ticker symbols, please. Thank you. Okay, so here's Matic, and Matic has got a trend line, which is going to be basically somewhere around here, right? So there's a whole bunch of trading here. Now, what you could see this through the volume profile. If we get above 70 cents on Cosmos, then this thing should rip up to about $1.20, $1.30. So I would look for this to break above 70 cents. That is what we're looking for in our current service for our Omnia members right now. We're looking for a buy above 70 cents for that. So it's basing out. If this gets going, and the volume is starting to show up now, if this gets going above 70 cents, you should have a very strong move up to about $1.30. Okay, let's do a couple more. The sandbox. Okay, the sandbox is also basing out, and I've got almost exactly the same. This is the same type of chart. I've got the same advice here. Look for a big volume above $1.50. $1.50 should squeeze up to about 3. So if you want to get a double on a trade, look to take a breakout on $1.50. It should squeeze up to about 3 before finding resistance. Okay, Phantom. Let's try that. FTM. Ticker symbol FTM. All right, so this one also has got, I would say the buy point here is about 52 cents on big volume. 52 cents on big volume should squeeze up to about $1.20. So again, that's a double. That's a potential double if you get there. Okay, let's see. We got a couple more leaking in here. MINA. Okay, so my sense is that most of you are calling in about these tickers saying, with the implication that you're already holding this and you want to know what's going to happen to this. This is such a great lesson that rule number 1 of risk management is that you've got to have your exits before you enter a position. The other explanation or the other expression is play defense during times of peace and not war. So don't wait until the shit hits the fan and say, oh, now what do I need to do with this thing? So Mina, I would not consider this one until it gets above at least $1.20 or so. At least $1.20, and then it should go up to maybe about 2.4. So that would be a nice double as well, too. But I won't touch this until it starts to impress upon me that it can carry accumulation. All right, next one is SNX. Now, don't get me wrong, guys. I'm not giving you a hard time about your investments here. There's nothing wrong with that. It's just that I'm telling you what the price is telling me. Now, this one's interesting. This is SNX versus Tether because it's got a higher low here. If it's able to squeeze above 350, then you should target about 550. Squeeze above 350, should target 550 on this one. Otherwise, stay away from it until it breaks 350. Okay. Next one is Rune, Third Chain. Okay, so we've got an aggressive buy on Third Chain at about 3. So an aggressive buy above 3 should be able to run quite a bit because there's very little volume profile above here. There's not much overhead resistance on this guy. So this could be a nice runner. We're starting, look at the volume here. Look at what's happening with the volume. That's a clue. So, and a super aggressive would be above 2.5. I would say wait until it gets above 3, with your stop being somewhere down here as well too. What do I think will happen with XMR being privacy coin going forward? I don't know. I don't know what's going to happen with any of these coins. Anybody postulating on any of these coins? I think recent events have shown us what to think about that. Now, I can look at the price and say, if you got a move above 135, then this should support a move up to roughly 200. 135 up to 200. That's all I care about. It's just what the price is showing us. Okay, guys, let's wrap things up for today. Thank you very much for the opportunity to look at your coins and your tickers and stuff. So I hope that makes sense, right? So we're not here like shilling out stuff. We're not here telling you guys, you got to stay long. You got to keep the faith, brother. No, what I'm trying to do for you guys is like, keep your powder dry. Wait until the market tells you that it's starting to accumulate. And then it's time to go, because what you're going to find is everybody else will be sitting on the sidelines going, man, I've got my fingers burned so many times, I'm not going to do it, because they keep buying every dip, right? And so they're screwing themselves into the ground. If you do this right, you're sitting on the sidelines through the bear with your powder dry, waiting, just like a sniper, waiting for the right moment to jump in. And then you will be the only person on that ride. Trust me, nobody else will be in, because everybody else is going to be sitting on the sidelines, or they're going to be in something else like running Amazon stores, or, in some kind of MLM thing, so that's the way to survive in today's bear. You got any final thoughts there, Mav?
Yeah, well said. I think to just go back to today's theme and what will be the predominant theme throughout July is don't fight the Fed, and go with the flow as it relates to the trend. And right now the trend is we're not in a recession just yet. I mean, that depends on, I guess, how you measure that. But what is very clear is that people are very scared, and they're way down in the bottom rungs of Maslow's hierarchy of needs. They're not anywhere close to having a sense of disposable income for cryptocurrency investment. Hey, that's just the nature of things. Those are the tourists, and they've packed up for the season, and they'll be back in time. But I think until then, crypto has to shake out a little bit of, sort of the sins of the bull market, if you will. We have to do some introspection. And frankly, I think that's for the best, because I think what will be defining the next bull run will be in some part regulation, either anti-regulation or regulation, solidarity, if you want to call it that. So the question about XMR, for example, that's going to have its own use case outside of the increasingly regulated crypto space, which is going to be looking to adopt like a spot ETF, is going to be trying to prevent things like Luna from blowing up. It's going to try to prevent the sort of contagion that is currently running rampant through this centralized, CeFi space.
Did you just say Mav's hierarchy of needs?
Maslow's? Yeah. I don't know.
I thought you said forget. Mav's hierarchy of needs. Well, yeah. I think we're going to adopt that going forward. So,
yeah, but people are concerned about their food, their shelter, their having enough to pay for rent, that kind of stuff. I think that's it is what it is, but we can use that as an opportunity to say, okay, let's press the reset button a little bit here. We don't have to destroy everything, but we certainly need to pull back a little bit, reset expectations, kind of get back to focusing on what are the core values of crypto, because clearly to create this space as a response to 2008 and then basically, have a mini version of Wall Street that is currently blowing up. Not a good look. And I think people are justified in being a little bit critical. But at the same time, I think there's same sort of criticisms can be levied against the current system. Right now, the dollar is king. There's no ifs, ands, or buts about that. And even though the M2 money supply is, ticking down for the first time, and we're seeing the Fed start to be a little bit more aggressive, those things don't fix the economy. It doesn't, like I said, make the corn grow faster. Or it doesn't make the oil pump faster. The person who's that? Okay, I can't even pronounce your username. Sorry. You're bringing up good points about corn, and seems to be a little bit of a fear spike around sort of those sort of commodities. And I think they're justified in some respect. But hey, the market's going to do what the market's going to do. And I think right now it's pricing in, or at least expecting the Fed to do what it's going to do. And hopefully by the end of this year, we can get out of this sort of lockstep cycle and get back to, well, I don't want to say get back to Fed money printing, but they've created this machine that there's no hope of them ever turning off, and it's not even a good probability that they're going to get it above 3%. Like it's here we are. The Fed's just auguring into the ground once again because their job is to control the narrative, and I think people right now are sort of buying that for what it is. But I think that will change. I think people will get frustrated very quickly, having come out of 2 years of lockdowns and that sort of good stuff. So, hey, it is a crazy time, but as always, it's an interesting time in the crypto space. And that's what we're here to help demystify, if you will. ReadySetCrypto, ReadySetTrade, ReadySetVision. These services, these communities, these exist to help you navigate the maze of this space. Certainly days like today where things are just kind of, call it quiet, call it sideways, call it wonky. I don't know. It is definitely the case that we're out there watching the markets and trying to help you just cut through the noise. Like Doc said, we're not here to shill. We're here to hopefully save you from making some mistakes and hopefully set you on the right path so that, hey, if you did make some mistakes, that you don't make them again and you learn from them and you grow. So I think that's the story that plays over and over again in the crypto markets. And I think we're better off for it. So anyways, that's it for me today. As always, check out the links down in the bio below to join some of our free communities. Really cool stuff going on in there. We have some really sharp people in our Discord, and I don't know, they continually impress me. They are constantly finding new angles of looking at this market. So it's free to join. You are doing yourself a disservice not getting on there. And our Discord is not set up to spam you or any of that crap. We're just here to provide a high quality service and platform and community for those looking for that kind of stuff, and less of the shout casting shilling Doc was talking about. So anyways, guys, as always, thank you so much for spending some time with us, and we'll see you next week. No matter where you are, I hope you're doing well out there, and take care out there. Cheers, guys.
Adios, amigos. Bye now.
Cheers.